The benchmark Nifty index hovers near the 25,000 level and within striking distance of its previous all-time high of 25,078. Realty and capital goods are the big gainers, even as FMCG and energy drag.
Mediassist buys the second largest group, TPA Paramount Health Services, to further cement its position in the market. The indicated valuation of the deal gets a thumbs up from analysts. The stock jumps up in trade.
Crude sees strong gains overnight on escalating tensions in the Middle East, stoppage of production in Libya and declining inventories, while metals get a boost from a pickup in Chinese demand.
RBI Governor Shaktikanta Das expects unified lending interface to digitalize credit delivery, just like UPI digitalized payments in the country. The platform will access records in different silos to speed up credit approvals with little or no documentation.
Hello and welcome to Halftime Report. I'm Ekta Patra and with me is Nigel D'Souza. Well, what we are seeing on the screen is a little bit of follow-on buying. So yes, maybe the enthusiasm is tempered a little bit at this point in time, but we were just about 5 points away from the record high or the previous record high for the Nifty today. So we're probably going to get there soon enough. But nonetheless, we have the Bank Nifty as well as the mid-cap index, which is leading from the front today. So up around 0.3% for both of these indices. The advanced decline ratio favoring the declines. A lot of companies in focus on account of their AGMs. So we have Maruti, IndusInd Bank, Imami, and then we have RIL, the big boy, which will take place on Thursday as well. So we have a lot to watch out for in the next couple of days. Hi, Nigel.
Hi, Ekta. And a couple of stocks are moving. We have the Nifty Financial Services Index that plays out the weekly and as well as the monthly expiry today on the futures as well as on the option side. And you have SBI Life, HDFC Life, both of them buzzing in trade. Both of them actually are relative outperformers, and that's why the Nifty Financial Services Index as well is doing quite well in today's trade. Even from the broader markets, there are quite a few big winners. Tata Elxsi, in 2 sessions, the stock is up close to around 15%. So big move is what we're seeing out there. And GSPL has come off a little bit from the highs of the day, but that one as well is bucking the trend. It's spiking up on very, very large volumes. But Ekta, let's get straight to the first management that we have on the show.
Well, yes, absolutely. Poly Medicure is the first company that we're watching out for. The company has raised around 1,000 crores via QIP and has indicated the proceeds will be used also for inorganic opportunities. To discuss this and more, we have Himanshu Baid, who's the MD of Poly Medicure, joining in. Mr. Baid, thank you very much for taking the time out. Well, if you could just start by giving us a sense in terms of this 1,000 crores that you've raised via QIP. What is the kind of interest that you did see? How many investors participated? How many were probably foreign funds, domestic funds? And what's the utilization of funds?
So I think, thank you very much for having me on the show. I think the most important thing was that the common theme across outside India, especially the foreign investors, was that nobody was investing more in China in last 1.5 years. And even in our sector, medtech sector, I've seen that most of the large companies have kind of trying to move away from China. So I think now that China plus one story is playing very well. And for us, I think what's very important to build more capacity, more plants, so that, we can, cater to, let's say, more larger markets, global markets. Our business is still export driven. So we are seeing more traction coming to us from global markets. And that's the reason that we're building 3 new plants out of this QIP proceeds. And of course, we're keeping some watches for some acquisition opportunity, which we'll look into it in the next 4, 5, 6 months. And some money will go get into the GCP, general corporate purpose.
All right. Hi, Mr. Baid. Good morning and good to see you. When I recall talking to you when the market capitalization of the company was a third of what it is today, and you said that, Nigel, there's immense potential, unorganized to organized, and even import substitution. It appears the street, in fact, is playing that story as well. Let's understand a couple of numbers then. 1,000 crores is what you have raised from a whole host of investors. So break it up for us. In the past, you have, I think, mentioned medtech is something that you were interested in. So will the acquisition be from that space? And what is the quantum of this 1,000 crores? How much would be inorganic? How much of it would be the core capex? And how much of it would be corporate governance that you were talking about?
See, basically, Nigel, we want to focus on technology because India, if you look at the current state of affairs, we are still 70% import dependent. So we need technology for manufacturing in the country. And our idea is to look at companies outside India where there is technology and where we can bring this technology and then grow it globally, which we have done in the past in our oncology business. We are seeing now big traction there. We did a small acquisition in Italy in 2019. So that's worked well. So I think similarly, we are looking at technologies in critical care or cardiology or in let's say, oncology space or renal space where we can expand. These are some of the businesses we are focusing on right now. And when we look at the allocation, so around 250 crores from this QIP is getting into allocation for future inorganic opportunities. And if we need to add more capital to it, depending on the business or acquisition we do, we'll add it from our internal accruals or even we'll take debt to do that. So I think the bigger idea is here to look at outside India for new technologies.
Okay, so you would look at outside India for newer technologies. But would that be more complex technologies, Himanshu? Because, the trend is that India is probably becoming more apt when it comes to consumables, when it comes to medical technology and export of that. But where we are lacking is probably high-end medical technology. So is that a space that you're looking at closely? Is that a space that you're going to probably look at in terms of inorganic acquisitions? And would 250 crores be enough for that?
See, I think the amount is not enough, right? So I want to answer that first. So I think, as I said, we'll add maybe more money from internal accruals or through debt. The important thing is our focus has been on import substitution. So we are still importing a lot of critical catheters, critical devices, and our focus will be to expand in that same area of critical devices. And most of it is import driven today in the country. So we will be working on substituting that by making them in India. And then again, going to global market, because today we are exporting to over 100 plus countries. So the target would be to make them in India, make them at a good pricing, bring in new technology, and then go to global markets.
Okay, all right. Let's get to the numbers then. The guidance, I think, for this year is around 20 to 24%, Mr. Ved, revenue growth?
Yes, we are sticking to that guidance, Nigel. Definitely are sticking to the guidance.
And with the margin improvement of 150 basis points, I understand.
Yeah, that's correct. That's correct.
All right, break it up for us then in terms of, the smaller businesses that are expected to start to contribute. The renal business, what kind of revenue will it do in this year? You also launched the cardiology business. So what could that be? And the third driver is the US business, which is very, very small, but has a potential to grow. So on all these three parameters, what will the contribution be?
See, on the renal side, we are seeing the contribution going from almost 90 crores to 150 crores this year. So this business is actually now picked up well, and we see a big potential in India. And now next year we will also focus on export market. I think that's what we want to do in renal space. But India itself, the target is in next 4 to 5 years, we want to have around 20% market share of this category. And cardiology is a very, very new area for us. Just started a few months ago. So I don't have a guidance on this area right now, but I think the target is that in maybe next 4 to 5 years, we want to reach between 300 to 400 crores in cardiology business in India and outside India. And that's how we are building product and product portfolio in this area and focusing more on interventional cardiology today. And later on, we'll get into more, let's say more on the surgery side and maybe more on the structural heart side. That is what we want to do. Critical care, which we started. Yeah. Sorry, say again.
The US business also. So we got renal goes from 90 to 150. Cardiology will be 300 to 400 in the next 3 to 4 years. And US 200 to
4 to 5 years, 4 to 5 years. That's what we have.
And US for this year, how does it scale
up? On the US side, we have already given a guidance of 15 to 20 million over 3-4 years. So already, the exports have started to the US, and slowly we'll build up the whole, ecosystem, the whole supply chain. And we already have contracts in place. So we are building more products right now for the US market. So hopefully this year we will, end up doing close to around 2 million revenue. But then going forward 3 to 4 years should build up to around 15-20 million.
Okay, so you'll do around 2 million in terms of sales in the US. Just wanted to understand, Himanshu, there's a lot of PE interest which is being seen in the entire medical devices space, in the unlisted space at least. Give us a sense in terms of, what the interest is when it comes to private equity, probably for your company. Have you been approached? to whatever extent you can talk about, and what are the industry dynamics at this point as well?
I think it's very clear that the industry is kind of carved out now from the pharma sector. And today we are 70% import dependent. So I think this gives a lot of, let's say, opportunity to domestic companies to scale up in India and also for the global markets. Because I spoke about this China Plus One playing very strongly. And there are very few limited opportunities for companies to manufacture products outside of China. And I think India promises to be the best place to manufacture these products. So my view is very clear that Indian medtech sector will grow very rapidly in next 5 to 7 years. And I think that's the reason that today Ps want to invest more money in this sector and expand. And I think globally medtech is on a roll right now. If we see US market, every company is doing well. In Europe also, almost every company is doing. So I think medtech per se is a sector which is going to be, pretty, say solid for next 5 to 7 years.
And any other segment that you would be looking to enter? You're in renal, you're in cardiology, but any other segment that you're looking at within the Indian space?
So I think it's more of a, let's say, natural progression. So maybe in future we could look into urology or gastroenterology, which are maybe closer connected to renal segment. So, but we have to keep on building the competence in every product area and also develop that clinical excellence. So I think that's what we are working on right now.
Okay. All right, Himanshu, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that is Polymed talking about 1,000 crores that they raised via QIP, and the company is looking to spend around 250 crores when it comes to inorganic opportunities, sticking to their guidance in terms of revenue growth, and would look to do around $2 million in terms of US sales this quarter. We take a short break. On the other side, Abhishek will focus on some insights on valuations of Cholamandalam and Bajaj Finance. Stay tuned.
Welcome back. Well, a few stocks. Just take a look at CESC. That one's continuing its upward trajectory. So big move is what we're seeing on CESC. Add to the list Amara Raja. The stock had cooled off a little bit of late. Month to date, it's down closer on 2.5%. But today it's moved up. It's up closer on 5% as we speak. So solid up move is what we're seeing on a couple of these counters. But as promised, let's focus on the NBFC space. Abhishek is standing by with some insights on the valuations of two stocks, Cholamandalam and Bajaj Finance. Abhishek, tell us how the valuation is shaping up for both these two names.
Well, under Velian, the valuations of Cholamandalam and Bajaj Finance have seen a convergence. So Bajaj Finance for the longest time was believed to be the most expensive NBFC in India with respect to price to book value. That spot has been taken by Cholamandalam. So in the current calendar year, Cholamandalam's stock movement with respect to the price has been that it's moved up by 10%, while on the other hand, Bajaj Finance stock price has actually declined by 8%. Hence, if you take a look based on Citi's estimate of book value for both these companies based on FY25 book value, now Cholamandalam trades at 4.8 times, while Bajaj Finance on the other hand trades at 4.5 times 1 year forward price to book value. Based on Citi's estimates, the return ratios of Cholamandalam is expected to improve in FY25, while that of Bajaj Finance is expected to decline in FY25 versus FY24. So Citi estimates ROA, that is return on asset, of Cholamandalam to be at 2.7% in FY25 versus 2.5% in FY24. Citi estimates ROA, that is return on asset, of Bajaj Finance to decline to 4.1% in FY25 when compared to 4.5% in FY24. Now again, Citi estimates ROE, that is return on equity, of Cholamandalam to be at 22% in FY25 versus 21% that it was there in FY24. So again, Citi estimates ROE, that is return on equity, of Bajaj Finance to be at 20% in FY25 when compared to 23% that it was in FY24. So it's important to note that return ratios of a lender do weigh on the valuations of that lender as well. AUM growth as per Citi's estimate is largely expected to be strong both for Cholamandalam as well as Bajaj Finance in FY25. So on a YOY basis, Chola's AUM growth as per Citi is estimated to grow at at 29.65% YOY, while that of Bajaj Finance is expected to grow at close to 27.5% in FY25. Operationally, Citi estimates better performance coming in from Chola when you compare to that of Bajaj Finance. So Citi estimates operating profit growth for Chola Mandalam to be at 40% YOY in FY25. This compares to 26.5% that they have estimated for Bajaj Finance. Again, Citi estimates provisions to rise by nearly 46% for Chola Mandalam in FY25, and that compares to 58.1% that they have estimated with respect to provisioning rising for Bajaj Finance in FY25. Citi estimates PAT growth to be at about 37.7% in FY25 for Chola Mandalam on a YOY basis, while that for Bajaj Finance, they estimate a PAT growth of 18.8% in FY25 YOY. That is year on year. Back to you.
Okay, all right, Abhishek. Thanks very much for that comprehensive analysis. Thanks. So that's the difference between the two NBFCs. But let's move on then. MediAssist is in focus as it's announced the acquisition of Paramount TPA. Yash is here with the details on this particular acquisition. Yash.
Well, Ekta, it's one of the largest acquisition that we've heard of in the insurance TP or the third-party administrator, sector. MediAssist has announced the acquisition of Paramount TPA, and this particular transaction will happen at an enterprise value of about 312 crore rupees. The equity valuation of this particular transaction exceeds about 400 crore rupees. Now, MediAssist has very recently also acquired two other companies in the TPA sector. One was, of course, Raksha TPA, and the second one was Medvantage. As far as Paramount TPA is concerned, it's 3 times the size of Raksha TPA, and it is about 7 times the size of Medvantage. As far as valuation is concerned, Paramount TPA is pegged at about 2.5 times sales versus Raksha that happened 1.7 times sales, and Medvantage, which happened just at 1 time sales. MediAssist itself trades at about 5.2 times sales and 47 times enterprise value. So it's a decent valuation at what it itself trades, giving it an additional market share. How much market share does MediAssist get through this acquisition? The acquisition will take MediAssist market share in the group segment higher by about 6% to 36.6%. Also in the health insurance segment, it will take the market share higher by about 4% to about 23.6%. So of course, the acquisition comes in with the larger ideology of the business in the group segment. It adds significant market share to what the company has at this point of time and comes at a decent valuation. Explains why the stock is up in today's trading session.
Okay, all right. Thanks a lot for that, Yash. Well, NIT, that continues its dream run. The stock is up more than 15% today. It's up 50% in 3 sessions. The promoters hike stake and Mr. Ramesh Thamani as well a few sessions ago pocketed 8 lakh shares. Rima joins us to run us through a quick analysis. Rima.
Hi, thanks so much for that. So last week on the 22nd of August, the promoters, the Thadani family, bought over 35 lakh shares in the company via a block deal, raising their stake to 37.2% versus 34.5%. So a substantial stake increase. Now this happened on the 22nd of August, that's a Thursday. Then on Friday, veteran investor Ramesh Thamani checked into the company and acquired 8 lakh shares. So since then, the stock has been excited. It rallied on Friday, it rallied 20% yesterday, and it's followed it up with a big move, taking the 3-day gain to nearly 50%. But there are a lot of other notable shareholders that I'd like to draw your attention to. So amongst the FIs, you've got Massachusetts Institute of Technology with a 5.7% holding. Hornbill Orchid India has a 2.5% holding. Amongst DIIs, Nippon India Mutual Fund, the small cap one, has 8.2%, and Marathon Edge has close to about a 3% stake in NIIT Limited. Back to you.
Okay, all right. Well, strong gains coming in for that particular company. Thanks, Rima, for that. NIIT, which is up around 16% But for the markets, there are a couple of other movers. Just watch out for Castrol India. That stock is up around 6% at this point in time, and it's done very well this year. It's up around over 50%. Giving it company is MedPlus, which was in focus yesterday on account of a large trade. That stock is up around 5% at this point. So a couple of these stocks in focus. We'll take a short break, but Sachitanan Uttekar of Trade Bulls will join in with some trading calls. Stay tuned.
Welcome back. Well, the markets are sitting with some mild gains. We're a little bit away from the fresh all-time highs, but par for the course. I'm just looking at the options data, and that's giving you confidence that this market has got the momentum with it. Let's look at the Nifty strikes. I'm looking at the 24,800 call, which is seeing a fair bit of action. Now, what's happened out there is those called writers, they are running for cover because now the stops are getting, triggered. If you're writing the 24,800 call, you were hoping that the markets don't go above the 25,100 mark, which appears now it's inside. So that's why there is some unwinding at those levels. But also you pull up the 25,000 put, there is signs of writing out there. And in an uptrending market, you want to see the nearest possible strike, see a fair bit of addition. And that's precisely what's happened on the 25,000 put. For me, the trigger is, and I've been mentioning this the last few days, the Nifty Bank needs to get past the 51,300, 51,400 mark. Why is that important? Because that's been a bit of a resistance zone, and that's where the 50 DMA as well comes in there. So we have visited this mark numerous times, but we have not able to conquer that. So that's the important mark. Keep an eye on that. We are holding above 51,300. You want it to perk up a little bit and get past that 51,400 odd mark. Let's get a technical check then. Sachidanand Uthekar of TradeBull joins us on the show. Hi Sachi, I just stated out some levels that I'm looking at on the Nifty Bank as well. Tell us, how would you trade the index though, and fill us in with your picks.
Good afternoon, Nigel. We have already beautifully explained the setup. In fact, my job is very easy now. If you look at the overall structure, the Nifty has been looking very confident since last week. The way it has been holding itself above its 5-day exponential moving average support. Now, this particular support has moved higher towards 24,900. And if you look at the options data, 25,000, also looks like a probable support. So we may see a very strong extended rally, which may push the Nifty towards 24,450. Now, this is a particular target that we have been indicating since last couple of weeks. So we are of the opinion that the ADX on the daily scale has started moving up above the 25 mark, which is a very strong, convincing sign of momentum. So the market structure looks clear. We may see during the day itself Nifty moving towards 25,120. Eventually, the positional target is well set at 25,450. And on the lower side, the support looks very strong at 24,800. So I think every opportunity, whenever the Nifty is consolidating, we are indicating and build further long positions.
Okay, and what about specific stocks, Sachi?
Good afternoon, Ekta. I think the OMC pack has been very consistent within this particular space. We like BPCL. On the weekly charts, there is a clear-cut bullish flag formation, which is indicating a price target somewhere close to around 372. Even right now, we saw an intraday dip towards the 5-week exponential moving average support, which is placed somewhere close to around 342. From there, the recovery has been very strong. So I think there could be a very strong short covering move which may unfold here, which may push the stock price higher towards 372 within a week. That's why we are recommending building long positions with a stop loss at 343. And on LNT, there's a diamond formation which has been exhibited. Now, this particular formation was ensuring that the price was oscillating within the range of 3750 on the higher side and 3550 on the lower side. But if you look at last couple of trading sessions, the stock has confidently started trending above that 3600 mark. There's a good convergence of its 520 and 50-day exponential moving averages. So I think the cluster support is now placed at around 3600. And with the convergence of moving averages, it is an indication that there could be a very strong directional momentum play here. We are anticipating that this particular move may extend towards 3940 on a positional basis, and that's why we are recommending building long positions here when it comes to LNT. The stop loss for the trade can be placed at around 3670.
Okay. All right, Sachidanand, we're going to leave it on that note. Thanks very much for joining in and speaking with us and giving us all of those strategies. We need to take a short break with the news that the Nifty is just about consolidating with a positive bias, up around 33 odd points, Sensex up around 100 odd points. Bank Nifty is speeding ahead with a gain of around 0.3% comparatively. Take a break, but on the other side, we have Pranav Bansal, MD and CEO at Bansal Wire Industries, to discuss their business. Stay tuned.
Welcome back. You're tuned in to Halftime Report. Well, if you look at the metal index, it's a little bit lower in today's trading session, but Vedanta is still holding well in the green. I understand that Mr. Anil Agarwal, he's in town, and in all probability, he could be meeting some of the larger investors. So that's what could be giving some kind of a hope. Remember, the stock went to around 500 rupees and then it corrected all the way to around 410. So that's why it's making up some part of that lost ground. So we'll stay tuned to any update coming in from the promoter entity. Well, let's focus on Bansal Wire Industries. That's the one in focus. We have Investec. They've initiated coverage, buy rating on the stock, and they've listed out a few factors to understand whether or not the management's vision is matching with what Investec has to say. We have Pranav Bansal, the Managing Director and CEO at Bansal Wire Industries. Hi, Pranav. Good day and good to see you, Vin. Well, Investec has put on a whole host of points, and two factors that they have focused on is backward integration, and the other one is the foray into specialty steel wires as well. Let's focus on the backward integration first, on the stainless steel side of business. The stainless steel rods is what you're backing up your unit with. They are talking about the EBITDA per ton moving up substantially. Could you tell us what could the potential savings be on a per ton basis? And do you believe that the EBITDA per ton on stainless steel wires moves from that 7,000-8,000 to around 15,000 in the coming years because of this backward integration?
Yeah, sure. So just to give you a background on this product, we are already the largest stainless steel wire company in India. And with this backward integration, what it will help us do is, of course, increase our EBITDA, but in the same, with the same thing, we will also be able to increase our quantities. Right now, we do about 70,000-80,000 tons of stainless steel wire. With this backward integration, we are targeting a capacity of about 1.5 to 1.8 lakh tons. And definitely the EBITDA will almost double from the current 7,500 tons, 7,500 rupees per ton. It will go up to 15,000 rupees a ton after this backward integration.
Got it. Okay. All right. So we got that part of it with regard to you'll do bigger volumes and also you will double your EBITDA per ton on the stainless steel wire part of the business. Got it. The other factor they're talking about is your foray into specialty steel wires. That's through steel cord wires. What capacity are you looking at, and what will be the steel cord EBITDA per ton? I understand that it could be in the vicinity of 40 to 50,000 rupees per ton. Can you confirm? And what about the volume front?
Yeah. So again, specialty steel wire is a segment that we are adding within this financial year. We've already started, or we will start within this financial year, a pilot project of 20,000 tons for steel cord. The potential for this product for us is 200,000 tons that we will add in the next 5 years in a phased manner. Right now, this is a good product for us right now because there is no other company. We will be the first Indian company to make this product. Right now, the demand is completely fed by imports and a Belgian company called Beck.
Got it. What can be the EBITDA per ton, Pranav? Sorry, the line is a little scratchy, so I just want to understand what is the EBITDA per ton. I believe it's 40 to 50,000 rupees per ton. Can you confirm? And also, you're talking about 200,000 tons, but Investec, they have assumed only 70,000 ton of capacity, and you will manufacture around 35,000 tons. You want to counter that? Will you do better than that?
So right now, the potential that we are looking at for this product is 200,000 tons. But yes, of course, this will be done in a phased manner. So by FY24, 25, 26, only some of it will be onboarding. And plus, there is a long approval process. So just installing capacity will not help us utilize it as well. There is a lead time for that.
Okay.
So even that number that Investec has put, I would say it is good for us because as a company, in the last 10 years, we've grown at 20-25%. With only those numbers that Investec has put, we will be able to achieve a higher level, which is good for us.
Okay. All right. But Pranav, if we have to talk about the whole business as a sales mix, based on the fact that you're also looking to get into these new segments, specialty steel wires, like you mentioned, and competition seems to be lesser within that space. What would your entire profile of sales look like, say, for example, low carbon, high carbon stainless steel, say in the next 2 odd years?
So we are in an industry where, being the second largest steel wire company in India, we only have 6% market share as a whole. So I would say there is a potential of growth in each and every segment. Yes, definitely. We are focusing a little more on specialty wire because this is a new vertical. But with that being said, all our three products, low carbon, high carbon, and stainless steel, will grow at its own pace as we have been. Plus, there will be a good increase in low carbon wires because of consolidation of our group structure. We are consolidating two of our group entities in this Bansal wire, which will give us a big jump in low carbon wires. So as a whole, all our products are going to increase. In fact, we have already set a plan to increase our capacity by 2.5 times by the end of this year. And this will only keep on growing every year.
Okay. So based on the amount of capex that you have, as of now, your balance sheet, I understand, is almost debt-free. So how exactly are you funding this capex? I think it's assumed to be around 2,000 crores in the next 4 years. Just give us a sense in terms of where exactly this money is going to be coming from. What is the debt figure that you're comfortable with? And what is your cash flow like as well?
So in the next 4 or 5 years, I would say a couple of things will happen. First, most of our expansion will come from internal accruals. Because right now, all the debt that we have in the balance sheet is almost zeroed down because of the IPO money that we got. And in the future, also the kind of expansion that we are planning, this would only be funded by majorly internal accruals or some level of debt. As a whole, if you look at our business for the last 10 years or 20 years, we've been at a very stable margin kind of thing. So our EBITDA or our profitability has been very, very stable every year. Therefore, we are also comfortable with a good amount of debt on our balance sheet in the future.
Got it. And I think your operating cash flow is approximately 800 crores odd, so that's what's giving you some kind of confidence. Give us two more numbers. We look at volumes and a blended EBITDA per ton. Now, I'm looking at the Investec note. They are talking about you doing 505,000 tons in FY26. And from there on, they're saying that it will scale up close to around, you are guiding for around 600,000 tons. So could you tell us what is your estimate on the blended volume front, point number one? And the EBITDA per ton, I understand as of now you're doing around 8,000 rupees per ton. But because of the backward integration, because of the better mix, do you see it going to 10,000 rupees, say by FY27?
So if you look at our numbers in the last 2 years, as a company, we've not actually been able to grow at the 20-25% that we have been, majorly because of the delay in the new facility that has now only started. Because of this facility, by the end of this year, our capacity will already be there for 600,000 tons. Now, whatever is what remains is for us to utilize it. And till now, we have been able to utilize all our expansion very well in the next 1 year or 2 years. And this is what we are hoping for in this expansion as well. With this, we are also adding a lot of new products other than just steam cord and backward integration. There are small products that we keep on adding every month. So with a mix of all of this, I think we are quite comfortable with what Investec has given us as a target for our sales.
So, but for FY26, 600,000 tons should be doable, keeping in mind the Dadri facility comes on stream, which has the automation as well, with an EBITDA per ton of 9 to 10,000 rupees. Can we work with that?
So EBITDA per ton completely depends on the product mix. Whatever Investec has done, I would say that we will try our best to focus on that. But as a whole, as a company, we've grown at 20-25%. So it is only fair for us to commit a number which is 20-25% even going forward. Yes, the opportunities are there. We have a big investment in here. We now have a good capacity. The growth of all our sectors are better than what it has been. So we should be able to do a little better. But for me to commit a number right now would not be possible.
Okay, all right. But you seem fairly confident that you can go ahead and meet what Investec has done, and probably on some parameters you're looking like you can outdo that. So we'll hold you to these numbers, Pranav. It's been a good listing for you and a lot of excitement as well post this brokerage note. We look forward to having a chat with you and understanding further details with regard to your return ratios as well as your working capital cycle. For the time being, though, we'll slip into a short break. You come back, we'll continue our focus on markets and stock-specific action. Don't go anywhere.
Welcome back. Well, a couple of these pharma stocks are doing well today. So Glenmark is continuing to gain after its numbers, which came out around 2 weeks ago. So that stock is at a fresh 52-week high. We have Cipla, which is giving it company, which is at a fresh 52-week high, along with Alkem, which is at the best levels that it's seen in a year, along with Jubilant Pharma as well. So all of these stocks are managing to gain some amount of traction in today's trading session. In fact, even Aurobindo Pharma has moved to a 52-week high, despite a lot of negative news circulating it with regards to one of their UGR units 3, which is under the regulatory scanner. But nonetheless, that's on a couple of stocks at this point in time. Let's focus on a CNBC-TV18 exclusive. Sources say that LIC has reached out to IRDAI seeking a review of surrender value regulations. Yash is here with more details on the same.
Well, Ekta, we just have about a month to go before the new surrender value regulations, which are issued by the insurance regulator, become effective. They start to become effective from 1st October. And just a month before that, what we've been given to understand is that the largest life insurance company, LIC, has written to the regulator seeking not an extension to the timeline, but a review of certain aspects of the increased surrender value regulations. Of course, we've been reporting constantly on it, how the surrender value was increased significantly, going to as high as 75% of the total premium from the current 30%. And there are certain aspects of the regulation where LIC has sought a review from the regulator itself. There are two specific points, if I could take you through both those points. For the calculation of surrender value, as per the formula which has been specified, one important element which comes in consideration in the calculation of surrender value is the 10-year GSEC yield. Largely assuming that at about 7%, the IRDAI in its regulation had given a 50 basis points cushion, which means the insurance companies could take the interest rate for the calculation of surrender value to be about 7.5%. The first ask from LIC is to increase that spread of 50 basis points. The number has not been specified, but the demand is to increase that spread, have a higher spread for the calculation so that the surrender value which they have to pay to their policy holders in situations of early surrender of policy comes down. The second, ask from from LIC is that, instead of hardwiring the 10-year GSEC yield into the regulations, which again assuming could be about 7%, let's have a plan-based interest rate, which means a particular insurance plan which invests in 30-year government securities should have the benchmark as the 30-year GSEC yield, and of course the plan which invests in 10-year government securities could have a 10-year GSEC yield interest rate as its benchmark for the calculation of surrender value. The difference in currently, as we see, for 30-year it's about 7.1%, and for 10-year is about 6.86%, but this could be a meaningful number as the number of policies for the calculation of surrender value increase, and of course the amount compounds by itself. So this difference is what LIC has asked for. First one, to increase the spread for the calculation of surrender value, and the second ask from LIC is to not hardwire the 10-year GSEC yield for the calculation of surrender value, rather have plan-based GSEC yield, which means 30-year, there could be 30-year GSEC yield, and for 10-year plans where investments are made, there could be 10-year GSEC yield consideration for the surrender value. This could, of course, ultimately bring down the surrender value which LIC has to pay to its policyholders and could be beneficial for them. So these are the two demands. We'll have to see if the regulator considers them positively or not.
Okay, all right, Yash. Clearly, that news has got the market excited. LIC now at the high point of the day, as his insurance stocks are doing well. And now, post this exclusive from Yash, we have LIC stock moving to the high point of the day. For the time being, though, we'll slip into a short break. On the other side, we'll take a break from equities. We'll focus on the commodity markets. Manisha Gupta will be joining in to help us out with something on that front. Stay with us.
Welcome back, and joining us on the show now is Mr. Atul Chaturvedi. He's Chairman, Asian Palm Oil Alliance. Mr. Chaturvedi, hi, thank you so much for joining us. And finally, some good news on horizon. There is a proposal that has gone in from the Agriculture Ministry, and this is about increasing the import duty for edible oils, something that the industry has been asking for over an year now. But with Agri Ministry now getting involved and a proposal through, you think this would see the light of the day sooner than later?
Honestly speaking, Manisha, Agriculture Ministry has been pitching for higher import duties for quite some time. But somehow or the other, their pleas were getting rejected by the Consumer Affairs. And obviously, that's because India was facing elections and the government was worried as far as the food inflation is concerned. But now, this time around, we have a minister who carries a lot of weight. And the other thing is that he comes from the state of Madhya Pradesh, which is going to be marketing soybeans in the next month or so. So I'm sure with the soybeans actually selling almost 700 to 800 rupees, much below the minimum support price, this time it seems his voice or the agriculture minister's voice might get accepted. So we are hoping whatever we've been asking the government to do for quite some time now might actually turn out to be correct this time around. Let's see how things pan out. I hope it doesn't end up being a wild goose chase.
We hope that too, Mr. Chaturvedi. Also, the point being that from the kind of MSP that has been put out by the government for soybean and for groundnut, the prices for both of these commodities are way below the MSP. We've heard of some agitations from farmers, from MP. There is, of course, elections waiting in Maharashtra to happen. Would you say that it could get farmer-centric from here on?
No, it should. In fact, the oilseed farmer has been shortchanged for quite some time now. And that's largely because India was facing elections and the government was worried on the inflationary impact of edible oil. But the trouble is that you were having headache, but you were putting the balm on your knees. In fact, if you look at the inflation, it was largely driven by vegetables and pulses and not by edible oil. In fact, edible oil was actually suffering from deflation and not inflation. So I think finally it seems that the government might see reason and they might impose. And the other thing which I thought is important is India should not fight shy of imposing duties. Because at the end of the day, if you impose higher duties, part of it is actually borne by the exporting nations like Indonesia, Malaysia, or Latin America, Argentina and all. Because there the values would come down. So I think India should not fight shy of imposing duties.
That message seems to be going loud and clear right now, and the expectation that this could come across as early as in the month of September, the first week itself. Mr. Chaturvedi, the other thing is, what is the kind of demand that you're looking at for India, especially ahead of the festival season? The numbers actually tend to get bigger. On a year-on-year basis, what is the kind of edible oil demand that India is looking at? People are eating out, so whether it's Horeca, it's hotels, it's institutions, food products, and in-house, all of those numbers are growing. What is the total number that you're looking at right now?
In fact, when the Indians imported massively in the month of July, hoping for duties getting jacked up, the demand actually fell and the prices in the country also suffered big time. But for almost now, last 15 odd days, we are seeing demand coming back with vengeance. And the other thing is that the festival season is just around the corner. So I think demand at this point of time is reasonably strong, whether it remains strong or not. But if we keep on listening that duties are coming, I'm sure that would help domestic demand reasonably strongly. My take is that this year our imports could be closer to about 16 million tons, even though this month I think has been a lot more sensible because we had imported far too much in the earlier months. This year we are putting a number at around closer to 15 million tons. And that should help improve the domestic values. But the other thing is that what we are getting from the ground level is that the soybean crop is shaping up very well, and groundnut is also shaping up very well. And Gujarat, for a change, is getting very good rains.
Very good rains. Yes, we've been seeing those pictures. Yes. Mr. Chaturvedi, thank you so much for joining us. Well, yes, Gujarat scenario, Gujarat crop numbers, all of that on the positive side. And of course, we are anticipating an import duty hike and that could support prices. And we take your point on the fact that the demand ahead of the festival season also really seems to be picking up. Well, that's about edible oil as a sector, and that's all the time that we have on the show as well. But stay tuned because Business Lunch will take all the action ahead.